Welcome to the OANDA Market Pulse Charting Analysis Update. My name's Craig Erlam, Senior Market Analyst at OANDA. Now today we're going to wrap up the week with a look at some more charts. I've got another half a dozen lined up for you, which to me have been of interest today. Now, I'm going to start with the yen pairs because we had the Bank of Japan announcement overnight. They cut interest rates into negative territory following in the footsteps of the Nordic central banks, the European Central Bank, where they've had some success here. So we've seen a small move into negative territory from the Bank of Japan, plus 0.1% into minus 0.1%. Now, it'll be interesting to see what kind of an impact this has on the economy. It has had an impact on the market so far today. The Nikkei 225 ending slightly higher, ending almost 3% higher, sorry. The yen has experienced some weakness. I think this is largely reflective of the fact that the markets, while anticipating a dovish tone similar to what we had from the ECB earlier this month, possibly not fully anticipating actual stimulus. I think I saw numbers before the event itself. It was around 52 to 48 in favour of some stimulus, so that leaves obviously a large group that were unconvinced at this stage. But we have seen a lot of weakness in the yen since the announcement. You can see that we saw this move through those resistance levels, which I was highlighting, which is no surprise given the events overnight, through 130 up towards 132.30. Now what's happened here is we've run into resistance around these 132.30s. We've also got the descending trend line here, which dates back to December 8th, 2014. Now let me get that one right. So yeah, so we've got this nice descending trend line. I should probably correct this end as well while I'm at it. Seems to have gone a little wrong. So actually it touched it pretty much perfectly before rebounding back. Now it's going to be very interesting to see if there's going to be enough momentum in this move to break through. Now because we've had this central bank stimulus, quite often you'll see that immediate first phase move, then you'll see some consolidation or small correction, and then you'll see quite often a second phase in this move. So I'm going to be very interested to see whether that second phase of the move takes it through that descending trend line, because that'd be quite a bullish signal if we do see a break beyond that trend line. Now we're getting mixed signals really from these lower candlestick charts, which makes it a little bit more difficult at this stage, because while we had the pullback off this very bullish looking candle, the next candle didn't really give us much information, a bit of indecision, consolidation. Then we saw another move higher. Now what I found interesting about this is we failed to make a new high. That's point one. Point two is we then ended the candle session, so that 4-hour candle, below the opening level. So that's quite a bearish candle really, but we haven't really picked up on that since the close of this candle. Really, we've just seen further consolidation, further indecision. Again, look down at the 1-hour candle. There's no 1-hour candles. There's no real clear pattern, I'd say. You could see this as being higher highs and higher lows, which in an uptrend is typically a bearish signal. It shows falling momentum, but then we're not seeing that falling momentum or apparent falling momentum being too reflected in these MACD or the stochastic. Really, you can see growing momentum on the stochastic, slight falling momentum on the histogram, but nothing on the moving averages. There's no clear setup here. I think at this stage, I'm just going to personally see how this plays out over the next 24 hours of trading or so. Of course, it's Friday, so this takes us through to Sunday night and early hours of Monday morning. I really want to see if that descending trend line is broken, to be quite honest. I want to see if that. Well, I do think we're probably going to see a second phase move back towards those 132.30s and another attempt to break through it. So I think this is going to be one to watch for the next couple of days. The same applies to sterling yen. Really, we had this rising wedge formation, which is typically a bearish setup, but that Bank of Japan decision overnight obviously made the analysis effectively null and void. We went straight through the upper part of the rising wedge, and we're now trading back towards 174s. Now again, I've just taken this lower trend line and duplicated it to create a possible flag formation. We've come up towards the top of that flag formation around the 174s, and we have run into resistance. Now again, we've got this kind of dilemma here whereby we're in this channel, and that channel is typically a bearish setup, but the problem is the fundamental outlook has altered things. And if we're taking a look at the chart now, on the face of it, we've got this nice little bearish similar to a shooting star, I guess, candle. We've had no momentum to the downside following it, really, back towards these 172.50, so a very relatively small move, but this is still a very bullish candle in the lead up to it. So we've got this bearish formation, we've had bullish news, and we've got this very bullish candle, and we're really lacking that downside momentum. No real clear reversal setup yet either on the 1 hour chart as well. So again, Sometimes I think it's sometimes the wait and see option in these is the best option. There's no point in rushing into it. Again, I do think we'll probably see some more pressure on the upside around these 174s, 175s, because we have when we get that second phase, which I highlighted previously. But what's going to be particularly interesting in this sterling yen is we actually now trading around the neckline of this makeshift head and shoulders, which I've highlighted previously. We still haven't received still haven't hit the first conservative projected level around 167, 160.80. Should we see a break below this flag setup, then I would anticipate that we are going to see it move back towards this level. But if we see a move above the neckline of the head and shoulders, then for me that would suggest that the fundamentals have overpowered the technicals on this occasion, which is quite often the case, which is why we always say pay attention to these central bank meetings, and that would make the head and shoulders, in my view, null and void, and I just effectively start afresh and try to focus more on the technicals once again, and forget about what has been. But again, it's going to be interesting in 24, 48 hours, market hours that is, to see how this pans out. 174, 175 now, crucial resistance level for sterling yen. Dollar yen, again, we saw a similar move. Now we've already approached the neckline of the head and shoulders in dollar yen, but the difference being we haven't actually broken below this level yet. We had one test where it got rejected the first time of asking, and since then we have moved high. Now we've had a very bullish move from around 118.80 to 120.50 today, so quite a bullish move. This is looking far more bullish than the others at this stage. But I guess then the dollar's looking more bullish than the other two currencies as well, so that would explain a lot of this. Now we are running into resistance here around these 120, 150 to 122s. To be honest, at this stage we've hardly had any kind of correction here. Looking back at the 4-hour chart, we've continued to really rally higher. Well, we had the initial correction, broad correction, sorry, I should say, back towards these previous resistance levels, and since then we have continued to grind high. Now it's interesting to see that on the MACD histogram we have seen some form of negative divergence, bearish divergence building up. These are higher highs and higher lows, so it could be taken to be a relatively bearish signal. But it's hard to be too bearish really when you've got 4 green candles, one of which is as significant as this one. We may see a form of correction of some kind, but I don't think I'd be particularly bearish at this stage. One thing I would warn about those, if we do close the day near those highs, that's a very, very bullish candle, and you can tend to see some form of correction the day following this, which would bring us back towards this 120 to 120.50 region, which was a prior area of support and resistance, and roughly the midpoint of this candle as well. So what we may see come Sunday night, Monday, is correction back towards these 120, 120.50s, and then that'll be the next important zone of support for this pair. I wanted to highlight cable next because we did see a breakover so far yesterday, of the rising wedge. Now the rising wedge is far more clear on the daily candle, not the weekly. So we've had this sell-off in sterling against the dollar. Sorry, we had the trading in the rising wedge up to this prior level of support, or prior zone of support, between 143.50 and 144. There we ran into resistance. We did see a nice green candle on yesterday, but then this was rejected once again at this zone, resistance zone, and since then we have had it a trade lower. We've seen it break through the bottom of this rising wedge, which suggests to me that we could see a continuation potentially of this downward trend. The next target, of course, being these 140.80s, the prior lows from January 21st. Below here we could be looking back a little bit further. I mean, ultimately, given what we've seen in the past, the size of moves from these 136.50s to 143, there wasn't much in terms of support and resistance. Of course, that doesn't mean we won't see it along the way, but the fact that we've had this rejected at the first retest of this zone suggests to me that there is far more weakness to come in this cable pair. The next support being around these 140.70s. I'm going to finish on a couple of indices, first of which is the DAX. Now, the DAX is continuing to look quite bearish for me. We have seen a bit of a recovery in equities and a bit of a recovery in sentiment over the last week or so, but it continues from a technical perspective to look quite bearish. Now, we initially had this rising wedge here that was highlighted on previous videos. We did break below this wedge, but we've run into support around these previous lows again, around 95. about 9590s, 9600s, and we are seeing a bit of consolidation again. For me, this shorter term pattern looks quite bearish. Again, we can zoom in on that on the 1 hour chart. That this is looking a bit again like maybe a bit of a triangle, a pennant. Either way, it's looking quite bearish still. But really, by breaking through this previous wedge support, we've effectively just created a larger wedge, and therefore the setup remains quite bearish. If we don't see a breakthrough this support, trendline support at the first time of asking, yes, we could see maybe a move back towards these 1050s, maybe even back towards this 10,100 region, which I highlighted as key level of resistance previously. There's no reason why we couldn't see that, but for me, this still continues to look bearish. In the meantime, I am concerned about these 9300s, given what the implications of this would be, well, given how bearish the implications of it would be, especially when we've already seen the DAX trading in bear market territory. And the same's true of the Dow in the US. Now, I was waiting for a third touch of this rising wedge when I last spoke about it, and we've had it since. So we've had 3 touches on the downside, 3 or 4 touches on the upside. So this now looks like quite a nice technical rising wedge for me. So any upside, I think, could be quite limited short-term correction, and I think we could potentially see a move to the downside over the next week or so. At which point we could see these 15 twos to 15 fours come under some pressure. Like I say, again, this is a massive level of support, because we've already seen a test of this rising trend line, which takes us from financial crisis lows. A break below here would be a very bearish signal, and even potentially hint at bear market territory. So it is quite worrying times. We are continuing to grind higher, but given the strength of the sell-off which preceded this, that's technically still a bearish signal. Just some stabilisation in the markets, maybe bears, sellers waiting for more attractive levels at which to short. I think at this stage, this just continues to look bearish for me unless we see a significant move higher. I struggle to see the upside. I struggle to see too much upside coming from this move in the Dow. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading. One more note, I'm not here next week, so the next video will be on Monday. Until then, I wish you all the best with your trading, and thank you very much for listening.